tomorrow. Yesterday, yesterday was purely theoretical teaching, and today we are advancing to the practical aspect. So, Mr. Harrison, we are happy to have you on board. Over to you.
Thank
Please,
you,
off your mic.
everybody. I welcome on board. Now, tonight, it is good. If you want to be a forex trader, the first thing you need to do is to have a proper knowledge, a proper educational foundation, and acquire the skill before you begin to risk your money. Before you risk your money, that is the way to be a good trader. And that is why we have brought you here for training to begin with. And as we also promised you, each and every one of you, once you register your your XNES account, we will hold your hand continually, follow you up, mentor you until you become a professional and begin to continue to make consistent profit. It's not when you make profit today, tomorrow you will fall down. No, we will hold your hand, continue to teach you every time to make sure that you are strong, you are grounded in the knowledge of forex trading, and will be making consistent profit. That is why we brought you here. So open your heart for learning. Now, to begin, oh yeah, now you unmute me there. The host, hello.
Hello?
Can you hear me?
Can I do what?
I said, can you hear me?
Yes, yes,
Yes,
yes,
we
we
can
can
hear
hear
you,
you.
sir.
Activate the camera now.
Pardon?
Okay, Mr. Joseph, please deactivate the camera.
Okay, like I was saying, today we want to look at, if you want to be, how does the forex trading begin? How do we go about it? Yesterday we looked at the concepts, different concepts that we can use, that what the forex trading is about and everything. We've talked about those ones. Some of the languages we have looked at those ones yesterday, but tonight we want to look at the chart itself. Now tonight, when you look at your screen now, you find a chart on the screen, is that not?
Yeah, yes, we can see it.
Yes, we
Okay,
can
good.
see it.
Now that chart that you are seeing is a demo account that I bring out uh, from one of my tradings. I just bring it out to show you. To show you. I will not show you my real account. So, but you will see it. I'll teach you from here. Now, in forex trading, there are what called strategies. That is how you make money from the market. There are things we call strategies. And one of the strategies is called simple geometric method. Simple geometric method, that is simple geometry strategy. When we talk about simple geometry strategy, you are talking about using things like trend lines. When you open your chart, on top of that chart now, you will see a plus sign. Are you seeing that plus sign?
Yes, yes.
Then you will see an F sign. Are you seeing all of them on top of your chart by the right?
Yes, yes, we can see that.
Okay, good. Now those signs, those symbols you are seeing, they represent information. And that F sign you are seeing, when you tap it, you will find a lot of information there. You will see things like the trend line, you will see things like the different like triangles, you will see things like rectangles, you will see things like square. All of them are inside that F sign that you are seeing. When you open your chart, we will take you there tomorrow, but today I just want you to see the chart and how we are going to trade, how we are going to look at it together tonight. Now, inside that F sign, you will find that those symbols I'm talking about, the trend line. And as you can see, when those stocks are moving up and down, when you place the trend line on it, you will place it in such a way that when the stock crosses it, then you will now say this thing can go up or it can go down. For instance, if it crosses the trend line up, you will wait for it. If it doesn't come down below it again, it shows that that trade wants to go up. But if it crosses it down and it couldn't cross it up again, it shows that that trade will go down. That is how you identify what we call either a buy opportunity or a sell opportunity. Now, when you have identified the opportunity, you now look at it. Where do I now place my trade? What we call entry. What we call entry. Where do I now place my trade? I should place my trade below this one. For instance, when you look at where the chart is now, the chart is at 1.13457. That is where the chart is now. Now, if you want to place your trade, for instance, now, you can now say, no, I'm not placing my trade there until it moves up to 1.13290 before I will place my trade. So you now wait for it to move to that point and you place your trade. That is what called entry point. Now, secondly, apart from the simple geometry pattern strategy that I mentioned, there are other strategies, what we call the chart patterns. There are charts. For instance, when the trade is moving, it forms patterns. Those patterns that the trade forms are called chart patterns. They are called chart patterns. For instance, now, let me show you. When you look on top of that, the MetaTrader 4 sign that you are seeing up at the center, are you seeing it? Hello?
Yes, we
Hello?
can see it.
You can see it, okay. Now, when you look to it to the left a little, you see something like cup that is formed there. Something like cup is formed there.
Yes, I'm not seeing it.
You are not
Yeah, we
seeing
can.
it.
I'm seeing it.
Yes.
I'm seeing it now, sir.
You are seeing it now, eh?
Yes.
Okay, good. You will see something like that cup that is formed there is a chart pattern. You know, when cup goes up, it has a hand by the side. So whenever we see the form of a cup in a market, we know that that cup is going to form a hand on it. And so immediately we will identify that this cup is going to form hand and the hand must come down. And so we begin to look for a sell opportunity from such a chart pattern. That kind of pattern that is formed in the market as the market is moving up and down is what we call chart patterns. That is one strategy that we also use. Today now, we are not trading those ones, but I'm showing them to you from the chart because tomorrow it will be practical trading. Everybody, I will tell you, by tomorrow you are going to download your XNES demo account. Having registered that you are going to trade market tomorrow. I will go to trade together. I will open my chart and we'll be trading. I will be trading from there. I'll be trading from here, and all of us will be seeing ourselves in the room. Where I will enter, I will tell you, look at this. This is the point at which you are going to enter, and now we are going to wait. When I get there, I will tell you how to be disciplined enough, what we call the market, what we call the market psychology. How you be able to hold yourself back and wait for the opportunity to come before you enter. And how you be able to hold yourself back to make sure that the market runs if it is a winning market. How it will allow you to run for you to get your profit to the needed point, which we call the take profit point. We will also teach it in the course of this lesson tonight. Now, having talked about chart pattern as a strategy, another strategy that I want to look at, which is very popular, is what we call the support and resistance pattern. In this chart, you find that the market moved up. And when it got to a certain level, when it got to 1.13780, it didn't cross that place. It now came down again. Are you seeing it there? Hello?
Yes, yes, we can see it. You can.
When it got to
Yeah,
your chart, when it got to that point, 1.13780, it got to that point, the market now stopped. It couldn't cross over that point. That point that it got and it couldn't cross it, and it's reversed downward, is what called the resistance level of the market. That resistance level, we also call it the roof of the market. Now, that particular point, whenever you see it like that, that the market couldn't cross it again, you now look for a sell opportunity. That from this point, I can sell my asset and make money from it. And like I said, when you have looked at it, you now say, okay, now that I want to sell, at what point am I selling? The market is already at 1.13780. Then at what point do I put my entry? Do I enter into the market? You can now say, I want to enter the market when the market falls down to 1.136 or 1.13700. You can take it. On 1.13760, you can take it like that. So you write all these things I'm telling you, you will write them down before you trade the market. As you open your chart, you put your paper by the side, your biro by the side, then you look at the market. Okay, this is the way the market is moving, and I will enter the market at this point. That note where you write your trade is what we call journal. And the process of writing them every day so that you know exactly what you trade for a day or 1 week or 1 month is what we call journaling. So when you are trading, you need to have a note by your side and a biro to
Hello, sir. We cannot hear you.
Hello.
Sorry, we cannot hear you again, sir.
We can't hear you.
capital, protect your money. Don't let the market engulf your money, or else you will not have money to trade. So you protect your capital. That's the first law. Then the second law is that follow the trend. Don't go against the trend. These are laws which are in the market that you need to know. But there are many more you are going to look at. For instance, as I am showing you this strategy, there are other techniques that are inside them, which we are going to share practically tomorrow. The time is not all that day. So we are taking them. So these are different strategies. I remember I told you, when it gets to the top and you couldn't cross it, we call it resistance level. Then when it falls down, as it got down to 1.12065, as it got to that point, you find that the market couldn't cross it down again. It couldn't go below that point. That point that it got to, that it couldn't go below it, and it went up, is what we call the support level. It's called the support level. So the understanding of this resistance level and the support level and be able to place a trade is what we call the support and resistance strategy. Are we following?
Yes, sir.
Following.
Yes.
Now, these are different
yes,
strategies
yes.
that you can use in the market.
I follow you.
Now, the chart, let me now on the chart. When you look at the chart now, The chart closed. This is a chart. This chart closed yesterday, Friday. It closed yesterday night at about 10 p.m. That was when the market closed. As it closed, by tomorrow or Sunday, 11 p.m., the market will open. And as this market is now, as it is now, as I am seeing it now, this market is a buy market. Is what? A buy market. So I will go long on this market tomorrow if I am going to trade this particular asset. I am going to trade, I'm going to go long on the market. I will buy the asset. And the reason why we buy the asset is because there are two lines on the market. Are you seeing those two lines? One of them is blue, the other one is red. Those two lines you are seeing, they are called moving average indicators. That takes us to another strategy called trading with indicators strategy. Trading with indicator strategy. This strategy, when you open that F that I showed you just now, you will now see different moving averages there. These moving averages that are there, you have the moving averages there, what we call the simple moving average. We have the exponential moving average. Then we have what we call other types of ROSI. All of them, they are there. When you look at the bottom, you will see one blue line on its own. Are you seeing it there?
Yes.
Hello? That
Yes, you can see it.
Yes.
It's called revised standard index. Revised standard index. That is the meaning of that ROSI. When you look carefully at the very left end, you will see ROSI 14, then 48.93. When you look at it carefully, those figures that are there, they represent something, but we are not looking at that particular indicator for trading. So I'm only mentioning it to you. It's one of the indicators, ROSI. There's another type called Ichimoku and many others. They are there. There were others called Parabola. All of them are there, and they are all being used for trading. Now, when you bring in an indicator, you must first of all understand what the indicator does. In the case of simple moving average, the ones that I have there now, in some markets, you will have people who are trading 3. There are some people who bring about 4, 5 indicators. But in this trade now, I only put 2 indicators. These 2 indicators that I put there, one of them is 20 moving average, simple moving average indicator. Then the other one is 200. Actually, moving averages, the highest is 200. Then you can have 8, you can have 10, you can have 15, you can have 50, you can have 100. But in my own case, I use 20 and 200. That is what my mentor taught me, and that is what I am using. It is when I want to trade other technical trades that I bring in other, like I told you, I can look at the chart and say, okay, this is a pattern that is formed. Is it a triangle pattern? I will look at it. Is it a rectangular pattern? I will look at it. There's what we call head and shoulder pattern. I will look at it and I will know what to do. And those things, we will check them out as we continue. If you, after you have registered with XNS broker, we will take you through with all these techniques that I'm mentioning to you. That is why you need to register now, so that we can continue to mentor you and you become a professional trader for yourself, so that someday you will be in position and be teaching people as well. Now, by virtue of those 2 indicators, you find that the market couldn't break the first indicator, which is blue. And that blue indicator is my 20 moving average. because the market couldn't break it down below. It shows that that market, that place is a support point. That is, there are sellers there who are saying the price, there are buyers there who are saying the market must not go below this point. And so it becomes a support point of the market. And because it is a support point of the market, what now happens is that the market had to go up. The buyers are saying this price must go up, it must not go below. That is the meaning. Take note, the argument of the market every moment is between buyers and sellers. Sellers are saying, let the price go down, we will set the price down. And buyers are saying, no, the price must not go down, the price must go up. This is the betting of the market every day as you trade. So these are different strategies that we use in trading the market. Now, when you look at it now, you find that below that 20 moving average is the 200 moving average. Whenever a market is able to break the 20 and the 200 moving average, definitely the 20 moving average will cross over down we cross over under the 200 moving average. It will go down to it. And once it go under it, it shows that that market is going for a sell. That is going bearish, like we mentioned yesterday. That was why I had to teach you those language, those terms, those forex trading terms, bearing, bullish, and all those ones that I taught you yesterday. If you were here, for those who are not here, reach out to the DM, reach out to the admin, DM the admin privately. They will send you what you need to know about yesterday teaching. Now, once it crosses it, you now know that this market is for a sell. But when it's unable to cross it, it shows that this market will go for what? For a buy. That is a strategy. That is a strategy, what we call the indicators trading strategy. And I do use it. Actually, in all my trades, I always put these two indicators. I always put these two indicators. They are always there in my trade before I bring in every other strategies to back me up, so that I will show myself for any trade that I enter to make sure that I don't lose. Now, I want to share with you quickly, because the time is running fast, before we give room for questions. Is this. When you look at the trade, let me take it at the center. Look at the chart at the center. You see that the blue line is under the 200 moving average, the red line, the red indicator. And you see that the stock moved with the candles. Those things that are formed there, they are called candlesticks. The movement of the stock in the market, it forms what we call candlesticks. When you look at those two candlesticks, you see the very big red candlesticks. Those big red candlesticks, they are called giant elephant bar candlesticks. They are called elephant bar candlesticks. Whenever you see elephant bar candlesticks, it shows that so much money is pumped into the market, because to form one of those candles is in billions of dollars. That was why I told us yesterday that it's the big banks, the hedge funds, the big institutions, they are the people who fund the market. And I told you it's a $6 trillion market that is being traded, and it's one of the biggest markets ever in the entire universe. Now, when you see it, it fell down from it left the trading, that particular trading indicator, it left it, it grew out of it. Whenever it grows out of it, it shows that the trade will go back up again. The reason is because whenever the trade goes up and it comes down and it goes sideways. That was what we shared yesterday. When the stock goes out far away up, it will certainly come back to the center where it began. That is one technique of how to take profit, where to take your profit. That is how to know it. Now, if you want to trade, don't lose more than one candlestick. To protect your money in this market, don't lose more than one candlestick. That is to say, no matter how professional you are in this market, there are days you will lose. But if peradventure you even lose in a particular market, don't lose more than one candle. And that one will take us to what we call money management in trading. Before you begin a trade at all, like I told you, put your note down. Put your note down and take your biro. Then you write down, how much money do I have in my account? I have $100. I have $200. I have $500. I have 1,000. Whatever amount you have in your account to trade. You now ask yourself, how much am I ready to lose? If the market is manipulated, no matter what happens, how much am I ready to lose? If I have a $100 account, I can say I want to lose $5 or I want to lose $10. I will write it down. If the market goes against me so much, I will want to lose $5. And so you calculate it, how many pips will make up for this $5. And you write it down. Then if the market goes in my way, how much do I want to make as my profit, as my gain? I will write it. If the market goes for me, I will want to make $20. And if I make it $20, where will the market get to before I make $20? I will write it down. Those positions that I write down will now form my entry and my exit in the market. I will enter this market, for instance, at 1.12310, and I will exit the market at 1.13290. I will now write all these numbers down and I will place my trade. Peradventure the market goes against me. If I put it at 1.12310, where do I want to get out of the market? I will want to get out of the market, peradventure it goes against me, at 1.2065. I will now write all these numbers down and I will enter the market at the appropriate point, which is called my entry. Once I enter the market, I will now watch it. When you place your trade on the market, it will not move to give you profit immediately. It will wait because something new entered into the chart. The chart, if not for the way it is now, is supposed to be a plain chart. Nothing is on it. By tomorrow when we shall be trading, I will show you. We see the chart plain, nothing is on it. Then when you place your trade on it, something new has entered into the chart. So the market will now first of all shake. So it may not go immediately your direction. It will now maybe give you 0.01 cent, 0.1 cent, 0.2 cents, 0.3 cents. At that point, don't fear and don't shake because it has not engulfed the risk of $5 that you tend to lose. Peradventure the market is going against you. Because there are times that the market can go down a bit before it will go up formally. That is why you needed to calculate where your exit and your entry need to be properly. And all those ones we will show you practically tomorrow. That is why we are showing you from the chart here now, as I'm quoting these figures, for you to know that this is how the market moves. Now, if it is a resistance, if it is a support and resistance strategy, for instance, is what we want to use. You have already known where the market got to before it came down. If you are placing a buy, which means you want the market to go up so that you make gain, you will now look at it, okay, the market couldn't cross here, and so since it couldn't cross it, before it gets to that point, I will take my profit. You now take the figure that is written there, you write it down, and you now place what you call take profit on it. And as the market gets there, automatically hit the point, then your money will just come in automatically. And also you place your stop loss, which is popularly known as SL. The take profit is popularly known as TP. If the market goes against you, as it gets to that point, the market will spring up. It will off by itself, and whatever money you lose will just go. But you won't lose more than a candle. Let me give you this advice, this counsel. Don't lose more than a candlestick in each of your trades. Don't lose more than a candlestick in each of your trade. If you are able to maintain this law of protecting your capital, you will find that you will be in the market continually. But when you allow the market to run the way you want, it can engulf your entire money. So this is where we want to cap it for now, so that we wait for questions that will come from you and we'll respond to them before 7:30. Thank you, everybody. So you can
All
ask a
right.
question.
Thank you, Mr. Harrison, for that wonderful lecture.
Thank
Mr.
you.
Samuel Ebube, you are raising your hand. Okay, you can go ahead with your question.
Okay, thank you, sir, for this session. It was really impactful. You were saying, I think let me start with the last thing you kept mentioning. Don't lose more than a candle.
A
How
candle,
do you mean by that? Yeah,
yes.
how do you mean by don't lose more than a candle? Like sometimes some of these candles they set it at 15 minutes, at 5 minutes. How do you,
Very good. Now, that takes us to the issue of time frames. There are what got time frames in institutional trading. We have two minutes time frame, but in brokers trading, we don't have 2 minutes time frame, except you will create it. Then we have the 5 minutes. When you see the 1 minute, you now see 5 minutes. You see 15 minutes. You see 30 minutes. You see 1 hour. You see 4 hours. You see 1 day. You see weekly. Then you see monthly. Now, people who trade big time frames, such as 4 hours, 4 hours, daily, weekly, and monthly, they are position traders. People we call position traders. Then those who trade the market daily, who are called daily intraday or daily traders, they use the other time frames. They can use 1 hour, they can use 30 minutes, they can use 15 minutes, they can use 5 minutes to trade. No, actually, nobody is advised to use 1 minute to trade, because it's too swift. It's always moves very fast. Pia, 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 pia. So it can cut your money without you understanding it. So normally, my mentor with the institutions that he uses, he's an institutional trader. He uses 2 minutes time frame, but myself, I use 5 minutes time frame. That is to say, each candle you see is 5 minutes. Each candle you see is 5 minutes in the market. Now, when you are using 5 minutes time frame to trade, you now know that each candle that is formed is 5 minutes. So a candlestick that will be formed in 5 minutes is the only one that you will lose. Are you following now, Samuel Ebube?
yes, sir. Yes, sir.
So that candle that is formed in 5 minutes, that's the only candle you will miss. You will lose. And once that 5 minutes over, you just stop that trade because it went against you. That is the meaning. So don't lose more than 1 candle.
Okay.
It's an advice. When people are
So
talking every forex trading is very risky. It's as a result of non-understanding of this concept of money management. Okay,
Okay.
another
So
question.
yeah, so you were saying something about sellers and sorry, simple moving average 2020. Please, can you
Okay, Helen, you can go ahead with your question.
hello ma? I'm still asking a question though.
Oh, Samuel, please try and round up so that others
Yeah,
can be
sure.
added to the thank you.
Sure. This is the
Good
last
evening, ma.
question. So sir, you were talking about simple moving average 2020. I really don't get that concept.
Just listen carefully. Listen. Can you listen myself? Hello,
Can you mute your mic, please?
admin. Can
Good
we
evening.
let's listen? Anybody that wants to ask question, let them ask within the limited time that we
Please
have. I would
kindly
have.
mute your mic. We've been coordinating ourselves. So please, let's continue in that spirit, please.
Good evening. Good evening, sir. I really appreciate this class
Yes,
today because
thank you.
I really have interest in this class. That's why I participate in this class. But sir,
Thank
before
you.
I start the class has gone far, so I was lost. My question is that how do I know the points, as in those figures? How will I get to understand those figures? If I'm taking stop loss at 0.20 or 0.30,
Mm.
then if my profit is on, I know profit I will take like either $50 or $100. How will
Mm.
I know those points? If I want to confirm the point, how will I know it? As in those number that 1.337 or 1.33709, I don't understand all those numbers. That's my question, sir.
Okay, now those that is those are the exchange rates. Those numbers you see now, they are the exchange rate. Yesterday we mentioned it. This is Euro USD chart that you are seeing now. And this Euro USD chart, the meaning of those numbers you are seeing 1.13, this one is that 1 euro is being sold at 13780 at that particular point. Are you following?
Yes, sir, I'm hearing.
Good. That is the meaning. Now, if you want to know the amount that you want to gain and be able to write it down, that will take us to what we call pips. Pips. Those pips, that is as the market is moving, it moves to like clock. As it is moving, when it moves from, for
When
instance,
please mute your mic. Mute your mic. You are being attended to. So mute your mic. Barney, mute your mic, please.
okay, are we there?
Yes, sir.
For instance, if the market is at 1.13780 and the market moves up, it will move up to 1.137.
Oh, sir, I'm having network problem. Oh.
Are we listening? Hello?
Yes,
Go
yes,
ahead.
yes, we are
Yes,
Here,
listening.
yes.
here.
Yes,
Okay.
I'm listening, sir.
Now listen, if the market,
Barney, mute your mic. Mute your mic. Barney, mute your mic, please. And just listen to your question be answered. Mute your mic. All right, Mr. Harrison, go ahead.
okay, if the market moves from 1.13780, it will move up to 1.13781. That one is called 1 pip. Calculated. They are calculated. So you now find that we move from 1.13780 to 1.13781 to 1.13782 to 1.13783. That is how it will move. till when it will get 1.4023. So when you understand this movement,
Danny, mute your mic. Mute your mic, please. Mute your mic.
are we hearing what I'm explaining here?
Yes, sir.
Yes, yes.
When the market moves from where you place it upward, it will be increasing by one at the last figure by the right of that figures you are seeing. And whatever figure it grows to become, that becomes your gain. And the movement of those figures, 1, 2, 3, is what we call pips. And those pips, they are money when they are converted finally. They are money. It will begin depending on the amount you are using to trade. Like yesterday, we explained that we have what we call the standard lot size, which is normally 100,000 shares. We have the macro lot size, which is 10,000 shares. We have the micro lot size, which is below that one. Now, whatever amount you are dealing with, that is whatever gain you are going to be expecting. One of the things that people are not doing well in money management is that greed makes them to place big lot size, trade big lot size, whereas they have small money. The market will just go against such a person. Once it goes against such a person, the person will just go out of the market. But when you take a smaller lot size in regards to your amount or the amount with which you are trading, you will be protected in the market. When you lose, it will be small. When you also gain, it may not be big money, but it's better that you are in the market than for you to take a big risk to get plenty money at once. And if the market caught up with you, you are out of it. You will lose your money. So that is how to calculate the pip for you to know how much you are going to get. Tomorrow, maybe when we are going to trade together, I'll be able to show you how to calculate the pip. Oh yeah.
Thank you, sir, for your answers. So I asked a question before Dixon.
Yeah.
You were saying something about a simple moving average,
Yeah.
and you showed it on the graph that is between 20. That is the graph below. Please, sir, can you recap on that side? I didn't get
Okay.
the.
I said there are.
Mr. Samuel, please, we will be attended to. Let's attend to others for now. Just note your question. The other person that you can
He's
tell
already
me,
taking it now. He's already asking
no,
me. I've already asked, and he's about answering.
Mr. Samuel, hold on, please. Divine, go ahead with your question. Just jot your question down, Samuel. We'll call upon you later.
I will
Divine, you can go ahead with your question.
answer you, Samuel. Just
Okay. My question is, for example,
yeah.
if your capital is $50, how many lot size can you put to trade?
You can put 0.01 lot size.
That is 0.01.
Yes, because the
Okay.
money you have is a very small money, so that you don't
Okay.
risk beyond your power. Actually, the accounts that can trade big money are as from $1,000 upward. Anything, for instance, even if I'm trading a $500 account, I will trade maybe something like 0.02, 0.03, and maximum 0.05. That's what I will trade if I'm trading $500 account to be able to protect my money. It's good that you have little gain combined every day than you losing your money into the market within a short time. Are you getting the
Okay.
point?
Yes, but can you flip more than one? There are one lot size.
Yes, you can do more than one. There are
Okay.
people
As far as you are making profit now.
who have big money in the market. If you have $10,000 in the market, you can trade 1 point, you can trade even 2.0 lot size. And that's when you see the market will be making, you before you know it, if you trade something like gold, you will see your account rising 1,000, 2,000. You will get it. I will not want to bother you with, you are beginners, and I don't want to bother you with placing many positions in a trade. Another caution I want to give to you, place one position at a time. Don't trade two positions at a time. Don't trade multiple positions as a beginner. Oh yeah. Hello.
Okay, Mr. Samuel, you can go
Hello.
ahead.
I've been raising my hand
Sir.
for
Oh,
opportunities.
Helen,
I
please
joined
hold
the
on.
group. Please.
Helen, you can go
I
ahead with
joined the
your
group.
question.
Okay, my
Sir,
good evening, sir.
I joined the group late.
Good evening.
My question
I
is,
couldn't catch up with all what you said earlier.
Please, Mr. Harrison, attend to Helen's question. She has been raising her hand. Helen,
Oh
go
yeah.
ahead with your question, please.
okay, so that place that you said always calculate your entry and your exit point.
Yes.
Those figure that you said, and you said we should not lost a one candle, like one candle. So
Yeah.
how am I going to calculate my entry and my exit with that, for me not to miss that one candle at a point?
Okay, now I told you just now that, for instance, let us not, if the chart is a plain chart, what we call price action strategy. That is an advanced strategy. That's why I didn't bother to talk about it. I don't want to stretch you with that. In price action strategy, the chart will be is a plain chart. It's a plain chart. You won't see anything on it. You only see the candlesticks open like that. Now, when you see the candlesticks, there are ways they form. For instance, if I see a chart pattern that is formed, I will know this is a sell pattern. But how do I place my entry? I will look at it. This candle came down, which means it's forming a sell position for me. I will now wait for it to do what we call a retest. That is where the candle began. Will it go back there within the 5 minutes? If it didn't go back there after the 5 minutes has expired, then I will know that this market is going to go down. So at the formation of that candlestick after 5 minutes, I will now place my trade, which is now my entry, knowing fully that the candle didn't go down below it. Are you following? Now,
Yeah.
at that point, I will place my stop loss under that candle that was formed initially. That candle that was formed initially, I will now place my stop loss there. That is, if the market comes down at all at any point in time, it should not eat more than this candle. That was what I was explaining by telling you that don't lose beyond one candle. Now, but if the market goes up, where will I take my profit? I will now look at it. Where did the market stop before? You say stop at this point. I will now give some gap down below it, and I say I will take my profit here. That is how we place our take profit and our stop loss, and how I know that it is only one candlestick that I am going to lose. Now, let me give you
All right.
an example. Let's look at our chart, everybody. Let's look at the chart. Are we there now?
Yes, sir.
Yes. Yes.
Okay. When you look at the center, at the very center, you will see those two big candlesticks red that came down.
Yes.
As the market was moving towards that point, it couldn't break the blue line down. Are you seeing it there?
No, sir. It's not showing on our board, on our
You look
screen.
at the chart.
It's
Sir,
showing
where is
on
the
my
center?
own. Oh.
Sir, sorry, where is the
It's showing
center?
on my own.
This
Sir,
center,
where is the center?
where the sign of that
It's showing on my own.
is.
I'm seeing it.
You've seen it, eh?
Yes.
Good. When you look at it, When the
So I'm not in the center.
of the line, he couldn't cross the line down. We couldn't cross the line up. I mean, that shows that the market wants to come down. So I will now wait. When you look at one small red candle is there. Are you see that small red candle there?
Yes, I'm seeing it.
Before the two big red candles, are you seeing it?
Yes, yes.
Okay. Now look at
I'm
that
not seeing nothing, sir.
and say, see,
Wait, sir, Mr. Harrison, please take easy, slow. I'm not seeing the candle you're talking about, please.
look at the center of your chart.
So I'm not seeing the candle because there are different red candles there. Okay, small candle down, abi.
Look. Are you seeing the center of the tree of the this thing?
Yes.
Yes, now the red candle and the green candle.
Okay, the
Yeah,
red candle that dropped
we
down.
can, sir. Some of us can. You
Yes.
can go ahead. They would, when you share the record.
Now look at the center of the chart. Now you see three red candles. There's one very small one there. Then there are two big ones that came down. Are you seeing them there?
Yes. So I
Yes,
Yes,
have
sir.
seen
Go
it.
ahead, sir.
Market got there. It was one blue small candle, one green small candle was there before that small red candle overtook it, right? Now,
Yes.
yes,
small blue candle couldn't break the line to cross to go up, couldn't break it. Rather, it formed a red line, a red candle. So what I want to do now is that I will now place my stop loss on top of that red candle. Are you following?
Okay.
So that
Okay.
if the market goes down, you must not eat
Please
the
mute your mic, please.
it must
Mr.
not.
Samuel, mute your mic, please. You will be given the time to speak. Allow the trainer to continue with the lecture, please.
So I will now place my stop loss on top of that small
Victoria,
red,
I see your hand. You'll be attended to. Adedeji,
and
you'll be attended to. Joy, you'll be attended to. Just hold on.
I will place my entry immediately this second big candle begins. That's where I'm going to place my entry. Now, when I place my entry for sale at that point in time, if the market goes up again against me, it will only be that small candle that I will lose. That is how you place your stop loss and how you take your entry in the market and
All
how
right,
you
thank you,
risk
sir.
only
We will
one
take the
candle.
remaining questions. All right, sir. We will take the remaining questions in this order. Victoria, go ahead with your question.
Yes.
After you, Adedeji, then Samuel. So, Victoria, over to you. You can ask your question.
Hi, good evening, everyone, and good evening, Mr. Harrison.
Good evening.
Sorry, I just want to ask a simple question. I just want to ask, like,
Mute your mic.
if somebody wants to go into trading right now, like, is it really compulsory or for the person to actually use a demo account? That's just my question.
You can use a real account immediately. Actually, let me tell you, when you are using demo account, you will not understand the market actually. But the reason why we do say, okay, let us, when we are doing training like this, we use demo account so that within the trade, you will understand the concept that we are teaching. But I always advise people to use their live account, that real money account.
All right, thank you very much.
All right, Adedeji, you can go ahead with your question. Unmute
Okay.
yourself and go ahead.
Good evening, everybody.
Good evening.
I just want to say is that I joined the this lesson late because of something. But I don't know why you guys put, we are supposed to start this lesson 7 o'clock. Why are we starting maybe earlier? I don't know why.
The link was shared
So
to us since morning that because of the match that is coming up soon, so we let us begin at this time so that we can close from the training, then we can go and watch our match with a comfortable mind.
okay. Pardon me. I was not online. So I didn't meet up with all what you have said earlier.
Don't reach out to admin. Reach out to admin. Reach out to admin, and everything. I will be given everything later.
Okay, but what I just want to say is that what you explained about the stop loss, I didn't understand. Maybe you should take it again, Abi.
No problem. Adedeji, you will listen to the recorded class after now. So, Samuel, you can go ahead with your question.
Thank you. Aro. Bottle in laptop now.
Mr. Harrison, are you with us?
I'm listening. I'm listening. What?
Yeah, you were saying
Okay.
something about simple moving average 2020. Please,
Yes.
can you
Now, I told you what we call the indicators trading strategy. When you use indicators to trade, you use the indicators to trade in the market. It's what we call indicators trading strategy.
okay?
Now, one of the indicators that is mostly used by traders is the moving averages. We have the simple moving average and we have the exponential moving average. But for me, I use simple moving average. And the moving averages, they are of different categories. You have 5 moving average, 5 level moving average, 5 minutes moving average. You have 10 moving average. You have even 8. You have 10. You have 15. You have 20. You have 50. You have 100. And the highest one is 200. And as for me, I use 20 moving average and 200 moving average. The one you are seeing on the chart, the blue one is 20 and the red one is 200. Now, the reason for the moving average is serves as a point of support and resistance to me. Are we following?
Yes,
I
sir.
use them to do support and resistance. For instance, the 200 moving average, if the market breaks it down, it means that the trade must be a sell trade. But if you would not break it down, it means that place is a support. That is, there are buyers there who are saying the price must not go below that particular point. So the moving average helps you to identify where the market will be going. For instance, like I mentioned the other time, on this trade now, I am going to take a buy on Monday, on Sunday by 11 p.m. when the market will open, because I know the market is going to go up in as much as it couldn't cross that my 20 moving average. I hope it's clear now, Samuel.
Yes, sir. To an extent.
Okay. Any other question?
All right. Thank you, Mr. Harrison. While we are waiting for, okay, Mr. Joel, go ahead with your question.
Hello, sir.
Hello, I'm listening.
Sorry, I'm not asking question again. What I need a favor, I want to have your own number, personal, please.
What my number?
You
Okay,
will
don't
reach
worry.
out to the admin, please. Hello,
Okay,
Hello.
Joel,
thank you.
reach out to the admin.
Okay.
Thank you.
No wahala.
All right. Mr.
Sir,
Harrison, thank
sir,
you so
we
much.
need your number too. Please, we need your number.
Reach
Please
out to
just
admin.
private chat the admin, please.
Okay, okay.
All right. Good evening, everyone. Mr. Harrison, thank you so much for this wonderful lecture. I've really learned a lot,
Is that not
and I
amplified
believe.
there, is it?
Hello.
Hello, I can hear you.
Hello.
Hello.
Okay,
Okay,
is that
please.
amplified?
Please mute your mic, please. Mute your mic, please. You will be given the privilege to speak later on. Mute your mic. All right, Mr. Harrison, thank you. I personally have learned a lot this evening, and I believe each and every one of us have learned something as well. Uh, for those of you who are having issues in opening your SNS account, please private chat me. Just send me hi, Some of you that are having issue with your documents, please reach out to me. I will guide you on how to go about it. There's something Mr. Harrison said that really touched me. Somebody asked a question: is it preferable to start trading with a demo account or your real account? And he said it is advisable to use your real account. Demo is just like a guideline, just to guide
Yes.
you. If you must make money, if you must make profits from this forex everybody has been talking about, you have to use your real account. And
Mm.
like we rightfully said yesterday, the trusted broker that we can recommend is Xness, of which we have dropped the link on our platform. Just click on it. If you have any difficulty, like we stated earlier on, you can reach out to me. The truth is, you must take the initiative for you to achieve something tangible in life. If you just go through this lesson or through this teaching because it is free without taking a proactive decision to guide you, you will not be able to benefit. It will just be a wasted effort, wasted teaching, and everything. So, in order for you to maximize this teaching, of which we have promised to guide you, we have promised to mentor you, is for you to fund your account. The beauty of Forex is no matter the amount you put, it is yours. I used to be scared of investing when it comes to forex. I'll be like, oh, all this online stuff, scam, and the rest. But I was encouraged by someone. A mentor told me, he said, I don't even have up to 10,000 naira in my naira account. All my assets, all my savings, they are in forex and they are in crypto. And I was like, wow. And you can sleep comfortably. And he said, yes. Do you know what he explained to me? When for those I guided yesterday, you got to a point where you were asked for your BVN, you were asked for your NIN to tell you the authenticity of this forex trade. It is not something that somebody can just hack your account and, go away with your money. You have access to it anytime, any day. So it is if you don't understand this concept, you will be scared to invest. One, people are scared to invest because they feel it is a scam. It is not. For your BVN to be required of you, you should know the authenticity. One. Then secondly, people are scared to invest because they have heard of people who have invested into forex and they lose their money. But the truth is, with the right strategy, you will not lose any money. When you are guided in the right way, you will not lose any money. So the thing is, we encourage each and every one of you to give forex a try. In fact, in the nearest future, in the next how many months or years from now, you will be glad you take this decision. If you are feeding your fears because you don't want to lose money, you will not make progress. And that is the truth. So we are being opportune. It's a very big privilege to have a professional trader in our midst, training us, of which in the person of Mr. Harrison, he was trained by a white person when it comes to forex. So we are really, really privileged. He's somebody that when he tells you can go ahead and buy, the market is favorable, you can trust the word. We are not like any other group that you can just join, come in and go. It is not like that. We are trying to let you know the authenticity of what we are doing here and the need for you to fund your SNES account. It's very, very important. No matter the amount you have, you can start from somewhere. Like Mr. Harrison also said, the more money you put, the bigger the profits. The lesser money, the lesser the profit. But he said something that touches me. He said, it is better you are gathering the small, small profit every day than not doing anything at all, or than just, aiming for the big one. You start from somewhere. Like when I started Forest, I started very little. Funded my account very little. I was scared a bit. I traded. I lost some dollar, like $3-4. I was like, oh, I'm not going to trade again. My mentor said, for where? Oh yeah, continue. I started again. Even with the fear, I was like, am I going to do it? He said, yes, you can do it. I was guided in the right path, used the right strategy, and I started adding some, making some extra dollar. It is something you can do from the comfort of your own. It doesn't stop you from anything. It doesn't stop you from your business. It doesn't stop you from, it's something you do at your leisure. So we are encouraging you. A lot has been put together to deliver this training to you because we want everybody to grow together. Life is sweeter when everybody is happy, when everybody is making their own money. Instead of looking for urgent 2K, we are giving you this platform to look for your urgent 2K by yourself. In fact, this one is not even urgent 2K, it's urgent $2, not urgent 2K, because we are upgrading. So please DM me, private chat me if you are having difficulty in opening your Exness account. Peradventure you have funded your account and you don't know how to trade properly, and you want to overcome the fear of losing money, reach out to us. We have a special group that we will add you, of which you will be guided in the right path. Don't be scared of forest. If those that are giving testimony can do it, we can do it. We didn't bring you here because you didn't join us because you are a professional and you want to learn.
We cannot hear you, man.
So we are telling you, learn with us and come with us, we'll teach you. Mr. Any moment from now, we'll be rounding up. The match is by 8. So in the next few minutes, we'll be. Okay, Joel, you are raising your hand again. Okay, go ahead with your question. Oh, sorry, Louis. Louis, go ahead with your question. Not Joel. Louis.
The question I already have is how much like
Mute
$500. Then
mute yourself and ask your question. Unmute, I
Louis,
mean,
you can
ask.
go ahead with your question.
huh? I think you were
Louis,
mentioning
do
you
you
were
have a
talking about
question?
500. Yes, I have a question.
Okay, go ahead with your question.
I have a question.
Go
You were talking about maybe $500, $100, $100. Then you that the money is not in
ahead.
that account. How do you
He was talking all about $500, $200,
Louis,
$100.
please,
Yes,
we give you 5 seconds. Go ahead with your question.
he was talking all about $500, $200 for the startup. Then we that don't have that kind of amount, how should we do?
That okay. Now listen.
Okay, like
I was not talking about $1,000, $500, what have you. I said when you want to trade and be getting big money, you also fund your account with big money. But whatever you have, you can fund your account with it and take the smallest lot size, which is 0.01. That is the smallest lot size that you can trade in the market, and you will still be getting your money. So whatever you have now, fund your account with it and grow it little by little, instead of you not doing anything with your money. For let's assume you have $50 now, and you just keep it there. It won't amount to anything. But when you fund your account with it, before you know it, it will grow little by little to $100, little by little to $200. That is how the market grows. That's how it is. And before you know it, you will be having good money. And you know what that means? If you even gain, let's take for instance, you have $5 in a day, that is over 9,000 naira already. But if you leave the money in the bank there, it won't amount to anything. Rather, bank will be using every technique to reduce it for you, all in the name of charges. But when you put it in your wallet, in Xness account, it will be there. If dollar rises today again, the money will increase. That is the meaning. I hope
Okay, sir.
it's
Thank you,
clear.
sir. Yes, thank you,
Okay.
sir. Yes,
Okay,
sir.
welcome.
all right, Joel. Joel, go ahead with your question. The last question for the day, please. We are almost rounding up. Joel, you can go ahead. Mr. Joel, you are raising your hand. Can you go ahead with your question, please? Okay, I believe he mistakenly raised his hand. Or you have a question? Okay. Thank you all for being part of today's class.
Remember, I
Like
need
our trainer rightfully said,
after being
tomorrow is hello. Please, if you
after.
have any question that is unattended to, kindly reach out to me. Private chat me.
Hello,
Just say hi.
hello. Are
Hello,
you
I
hearing
can hear
me?
you. Go ahead.
I said that
Yes, yes, we
for
can
now,
hear you.
I've told you before that I don't really have money now. But what is the lowest amount that I can fund my account with?
Okay, you can forward your account. Just private chat me. Just say send me a DM. It's your own money. Whatever you fund your account with, it's going to be in
No,
your wallet.
no problem, no problem. We'll talk about that later.
Okay,
All
good.
right, thank you. Just reach out to me.
Okay.
All right, thank you. See you all tomorrow by 8 p.m. Today's class was adjusted, and because of the sorry, because of the league, because of the football match. So see you tomorrow by 8 p.m. Endeavor to continue with your registration as we earlier said. Thank you all and good night.
Good night. Good night. Good night.
Good night, everyone. Good night.
Good night.